Welcome everyone to Vested Interest. This is Shane backing in for another stock pick of the day. Today we are going to cover one we have looked at before on this channel, Johnson & Johnson. It is July 11th. Let's jump right in the video. About Johnson & Johnson, if you want to know more about this company, check them out, www.jnj.com. That is their homepage where I pulled this information from. At Johnson & Johnson, we believe good health is the foundation of vibrant lives, thriving communities, and forward progress. That's why for more than 135 years, yes, that's right, 135 years, they've been around, seen all the downturns, Great Recession, multiple world wars, multiple wars in general, the Great Recession there, the 2000s housing crisis, just you name it, the 70s and 80s fuel crisis, again, you name it, they've been through it, come out the other side. I think they will be fine if we have any downturns coming up. We have aimed to keep people well at every age and every stage of life. Today, as the world's largest and most diversified healthcare product company, we are committed to using our reach and size for good. We strive to improve access and affordability, create healthier communities, and put healthy mind, body, and environment within reach of everyone, everywhere. Every day, our more than 150,000 employees across the world are blending heart, science, ingenuity to profoundly change the trajectory of health for humanity. So they operate through a few different sectors. MedTech, you can read through this, but orthopedic, surgery, interventional solutions, vision, pharmaceutical products, immunology, cardiovascular and metabolic disease, pulmonary, hypertension, infectious disease and vaccines, neuroscience, oncology. And then they are going to, another thing to note, they are going to have a spinoff coming, I believe, by the end of November. They'll be spinning off into this new company, Kenvue, right? So if you own shares of Johnson & Johnson during the spinoff, I'm not sure exactly what the split will be, but you'll get some shares of this new company, I believe is how that's going to work out. You'd want to do a little bit more research. And again, check out the press release on their homepage, www.jnj, if you're interested in more information on that spinoff. Again, I believe it is going to be finalized by the end of November of this year. So if you were interested in taking advantage of that spinoff, I know some people like to jump into companies before they do a spinoff so that they can maintain the shares that they have of the current company, as well as pick up some shares of the spinoff whenever it happens, right? But that is J&J in a nutshell. Let's take a look at why we're looking at them today. Down 0.55%, so not a huge drop, but a drop nonetheless. We're talking about Johnson & Johnson, ticker J&J, closed out the day at $158.63, and I believe whenever I was doing the research on this video, they had a issue with some recalls, so that might be one of the things impacting their stock price right now. Although in general, healthcare seems to be getting hit pretty hard. I know AbbVie's pulled back, Pfizer, Merck, several others have pulled back recently. So it may just be the overall sector is getting hit right now. But again, Johnson & Johnson closed out the day at $158.63. 52-week range as low as $150.11, as high as $181.04. They are closer to their 52-week low, though not right up against it. They still have, about $8 and some change to drop if they were to retest that 52-week low. Average volume 6.5 billion. Today was 6.5 billion, so pretty much in line with their average for volume, but a clear sell-off throughout the day, right? Pretty much from start to finish. Market cap of 412.237 billion, so large cap company here. Beta of 0.54, less volatile than the overall market. PE ratio, this is elevated, though I did look up their forward PE, and it is more in line with what I'd like to see for a company like this in the 14-15 range. So right now it is elevated, though the future outlook brings it more in line with where it should be. EPS, earnings per share, is $4.77. Earnings date coming up July 20th. So by the end of the month, we should know how they're doing for this year so far. Forward dividend is $4.76 paid out annually. They are a quarterly payer here, so divide by 4. We'll see that here in a little bit. Nice dividend yield of 2.98%. We'll see how it's growing here in a little bit as well. Ex-dividend date was May 22nd. They paid out on June 6th, so you would be in line for the next dividend if you were to buy them now. And according to Yahoo Finance, where I pulled this information, not affiliated, just one of the sources that I like to look up information, they have a one-year target estimate for the stock price of $179.71, so speaks to some potential upside appreciation in the stock price here. Now, I'd like to look at dividend yield theory. You'd find that under statistics. Go down to dividend and splits. Look at their 5-year average, 2.61. Compare it to their current 2.98, or where they call forward annual dividend. Same thing, 2.98. And since it is higher than their 5-year average, this speaks to some undervaluation. These numbers are inversely correlated. If the number is higher than their 5-year average, it speaks to undervaluation. If this number was lower than their 5-year average, that would speak to overvaluation. So again, according to dividend yield theory, potentially undervalued on this one. Now, one of the things I do not like, they have an elevated payout ratio here, 94.76%. This is above what I like to see. Though this company I am not as concerned with. They have some pretty good growth here. We'll look at free cash flow as well, because that's one of the things. We want growing dividends. We want growing free cash flow. Now, 2019, 19.9 billion. 2020, there was growth to 20.1 billion. Dropped down in 2021 to 19.7 billion, and another drop down in 2022. So overall, from 2020 through 2022, a decrease in free cash flow. So that's not real good to see. Though I would be interested to see what happens whenever they report out here on the 20th to see what they're looking like for this year. Hopefully that would increase. And one of the things, the idea behind the spinoff is to help with this company overall, making both sectors that are kind of, different, could be different companies, increase their earnings per share and increase their free cash flow. So we'll see how that spinoff impacts this one. But overall, not great on the free cash flow aspect of it. They are repurchasing shares, so that is nice to see. But so far, all the numbers a little bit elevated in the PE ratio, and free cash flow not great. Next up, stockanalysis.com is another source that I like. I always recommend more than one source so you can back check the information that you are looking at is accurate. And I'm not affiliated with stockanalysis.com, but of the 12 stock analysts they've had to take a look at this, they call it a consensus buy, though it is creeping back close to a hold here. They have a low estimate of $40, which is, wow, that is really low. That seems like an outlier there, but that's their lowest estimate, which would be a 74.78% decrease from where it currently sits, and that would be a massive drop-off. Average estimate of $167.58, and it is currently a little bit lower than that. So if it came back up to their average, that would be a 5.64% increase in the stock price. And if it happened to hit their high estimate of $215, that would be a 35.54% increase in the stock price. And really, I would throw out this low, I would throw out this high, and I would look for them somewhere in the average to the median here, average of 167 to median of 180, which would be pretty close to what we saw from Yahoo Finance on the previous page. Now, gives you a lot of the same information here from Stock Analysis, just in a different manner. Financials, you can find their income statement, their revenue, their balance sheet, all that under their financials. Statistics, I like to go in and look at return on equity and return on invested capital, which is what we'll do over here. This is the forecast of what we're looking at, and we'll see dividends in the next page. But as far as financial efficiency, how well the company reinvests its own capital, return on equity, ROE, 17%. Return on invested capital, 21.80%. I like 10% or better, so this beats both of those numbers for me. So again, real nice numbers overall. Free cash flow a little wonky, PE a little high, and the payout ratio in the 90% is a little off. Now let's look at dividends. Obviously, we want growth. They're growing dividends at 6.296%. This payout ratio says it's 99.79%, which would be even more alarming than the 94.95 that we saw from Yahoo Finance. So maybe even look up a third to make sure that this is accurate. But both of them show in the 90s. You can clearly see the growth going back to 2020, $1.01. 2021, they jumped it up to $1.06. Then in 2022, up to $1.13. And recently here in 2023, they jumped it up to $1.19. And I am long Johnson & Johnson. I have 89.022 shares. I'm trying to get this to 100 shares here, so I like the pullback. I have 145,000 into the position. I'm sorry, 14,000, not 145,000. That would be almost my whole portfolio. $14,500 into the position. I am down $380 or 2.61%. Currently worth $14,120.67. This is one, again, I don't mind seeing the pullback. I'll continue to decrease my cost basis, and I'd like to run this to about 100 shares and then probably back off there. So I'm hoping for more of a pullback. I wouldn't mind if it pulled back to that 150, 52-week low, or even set a new 52-week low, and I would keep adding to maybe 100, 110 shares, and like I said, then back off a little bit. This is the vested interest stock screener. Go ahead and pause this and go through this at your leisure. This is how I set up the video, so it kind of gives you an idea of why I run through the videos the way I do, and how I look at a company to see if I'm interested in investing in them at all. Well, that is it for this one. Trying to find value in this market. A lot of companies have run up the last couple of days. A lot of green out there, which is nice to see, but it does make it harder to find some value. So this is one, like I said, Johnson & Johnson pulled back there. Wanted to touch base on that. And the healthcare sector overall right now seems to be pulling back. So seeing some value in that sector overall. As always, appreciate you stopping by. If you haven't done so already, don't forget to show much love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hit that subscribe button down below if you have not joined the channel. And drop a comment. Let me know what you think of Johnson & Johnson. I like this. Anything under 160, I'll continue to add. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have a stock like Johnson & Johnson you'd like me to cover in the stock pick of the day series, go ahead and drop it down there and I will work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in investing journey for educational and entertainment purposes. Investing involves risk. It money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.